Welcome to Revere Asset Management's Your Money with Danny Stewart.
The market will always overshoot to the downside and to the upside.
And Don Vandenbord.
Because it's not how much you make in the markets, it's how much of that you can keep.
Where do you get your pie? Do you have outside pie? Do you have farmed out pie? International pie? Where exactly is your pie from? Because if your advisor is also a broker or custodian, then you have pie. So I ask you again, where is your pie from? Now, we have a few articles in the mailbag, actually only one or two, I don't know, but there'll be a few. But you know how I trash the marketing. It's really, these articles are really articles to advisors about how to manage you. Here's an idea. Why don't you just do a really good job and make a really good performance and control the drawdowns? And then you have people flocking to you like us instead of having to do a whole bunch of marketing. We do marketing word of mouth. Clients we don't really spend on marketing, at least not yet. But anyway, I saw this article that Fidelity taps Vestmark as their new custom model portfolio. Folks, it's the same stuff, just different lipstick. You know, pie charts are us. So it's not only internal Fidelity pie, like Fidelity Contra Fund, Fidelity this fund, Fidelity that. You know that if they really thought you weren't very bright, they'd give you all Fidelity funds and 6 out of 6 in your pie chart, but then you'd realize how incestuous it really was. So what they do is they give you a couple Fidelity funds, Contra Fund always being, because everybody loves the Contra Fund. It's their flagship that Dan, what's his name, used to manage. Anyway, so they got their Fidelity. So what they do is they give you a couple Fidelity funds, and then they give you a couple outside funds, other funds, Janus Grove, whatever, Dodge and Cox, Balance. They love that. So that it's not so apparent that it's incestuous. Problem is some of those mutual funds, they get little fee sharing and stuff. Anyway, all I'm saying is it doesn't matter whether it's Fidelity's own internal pie or external pie. And by the way, I'm not picking on Fidelity, Vanguard. They all do it. They all do it. It doesn't matter. So where do you get your pie from? And I wonder if you have European or Asian pie. But speaking of pie, Dan, we don't have pie charts at Grotection.
No, cheesecake charts.
I love, oh my God. I don't want to go on a rabbit hole. My wife makes my two favorite, cheesecake and pecan pie. She makes a cheesecake pecan pie. Oh, mine is to die for. Anyway, I don't want to go down a rabbit hole, but we've got huge news, big news. It's the Big Ten. It's the Big Ten at Revere, Don's 10th anniversary. Woo! And to kick that off, we're going to go to I'm going to read you, instead of the regular mailbag, and I do have a couple mailbags because they're good, and we want to bring you under the tent. However, that's one I forgot. It was the one about, assimilating. Don, get the email that you sent back about how we're going to assimilate the S&P. That's the one I forgot. But anyway, you can tell we're producing on the fly. I'm going to send you an email that I just recently sent to existing clients. You may want to pay attention. Because Grotection, our flagship portfolio, may be closing its doors soon due to our incredible success and growth. So anyway, the mailbag's going to start with Revere mailbag to our clients. So let me see, where is this? Okay. Revere, by the way, this could also be for an advisor with book of business that actually wants to join Revere, so that they don't have to give their clients a pie charts or us portfolio where they make 7-8% and draw down every 30-35% every 5, 6, 7 years. You want a better way to invest where you're making low double-digit returns with no bear markets, come talk to us. Anyway, Revere valued clients, I wanted to let you know about some exciting developments at Revere, as well as giving you first invitation and first right of refusal to the remaining access to our flagship portfolio, Grotection, which will close to new investors at the $400 million mark. This is due to liquidity restraints of purchasing mid and even smaller large cap stocks in continually increasing blocks. As we grow, it will preclude more and more attractive stocks if we want to ensure adequate liquidity for an easy exit without a negative price impact. We feel this would be unfair to existing Revere clients, especially the longer-term Revere clients. For this reason, we will close Grotection to new investors at the 400 million mark. We are currently at 300 million. Now it's about 312, 315 already. Currently 300 million, while bringing in millions each week. Just another 25% from a combination of new money and the portfolio growth via Revere's team's excellent management skills. They made over 25% last year. Anyway, this will come quite soon. Therefore, if you have any other assets at any other advisor, or you were doing it on your own, you may want to consider bringing over your remaining assets to Revere before we close Grotection to new money. We've already gotten clients coming doing. We will be rolling out a new strategy we have been working on that will necessarily focus on very large and mega cap stocks with leverage and leverage inverse ETFs. It simply won't have the smaller large cap and mid cap names. We believe, just like Grotection, this strategy will be far superior to some pie charts or us asset allocation, buy and hold with some random date rebalancing. A question, how do you know that 1 out of 365 years right time to rebalance? I mean, it could have been 2 months ago before the market sold off 25%. Just saying. Anyway, that said, if you want more success with Revere's proven Grotection strategy, you may want to act fast. I will be announcing this to all listeners and outside investors beginning next Friday on our podcast. That would be this podcast. I'm giving you notice right now, folks. This will give existing clients a head start advantage. They're already starting. If you have any questions, please reach out to me directly. Thank you for trusting with Revere with your money. Did I mention that's the name of our podcast? See, at Wall Street thinks your money is their money, and they take your money and they make it their money, and they buy a little bit of China and emerging markets and international and Europe and the California muni bond and tech stocks, and they spread it around among all the municipalities, the government agencies, the bonds, and the stocks and the equities, small, large, mid, because those are their real clients. See, you're the cattle, he's the cowboy, he's the roper, he's delivering you to market. You're getting sold, they're selling you like a product. You're the input, the widget for their pie charts or us portfolio. Are you tired yet? Have you had enough? I don't know. But if you want grow, you best hurry. Anyway, I got to go to, the mailbag. I almost forgot that. All right. So before we go, I'm going to do a couple mailbags real quick. All right, this is 87MW. Quick question. This is a great question, actually. Why isn't our uninvested cash kept in the 4% Treasury money market? I thought free cash was swept into high interest money, but still available immediately for trades. We're currently holding 19%. That is not true. It doesn't automatically. It goes to the core cash, which is a much lower interest rate. You've actually got to sweep it into a Treasury money market mutual fund that gets T+1 trade day set, and it settles at the end of the day. So it's not as fast. So anyway, we are working on a process currently to optimize and sweep the extra balances between Treasury, money market, and core for speed. Schwab and now Fidelity's follow suit, are not making it easy. It also depends on our perceived holding period, meaning how long we anticipate holding the cash. And then if wrong and we hold longer, it looks inefficient, but in reality, it was the right decision at the time. So if Don thinks it's going to be a short-term pullback and he's not sure yet, and he may hold a little extra, he doesn't move it in the Treasury money market. However, if the market looks weak and the trend is still down, then he's going to allocate more to the Treasury money market. Like in 2022 inflation bear market, we had a lot of Treasury money market for months. Anyway, so this is my comment, folks. Look, we do sweep in the cash if it builds up, and if we think we're going to hold it longer. All right, but don't miss the forest for the trees here. All right. That 12, 13% long-term annualized return that we've got with no bear markets includes the money market interest, includes the dividends, includes the capital gains. That's everything. That's all in. You don't have to worry about all that stuff. We take care of it for you. You just got to sit back and watch the Tection part when it's ugly and watch the grow part when it's good. Anyway, all right, on 8.8 PK, and this is basically, he's asking the difference. I'm going to go in the long email, but he's asking the difference between Robotection and Turbotection. Robotection is for very small accounts under 10K that cannot have individual stocks. We only do Robo for clients with an orphan account, like a Roth they can't do anymore, or a kid's account or grandkid. For orphan accounts for their kids or grandkids, it isn't relevant for new clients unless they have an orphan account they cannot consolidate. It is only available with my approval. Turbo has similar rules to Grotection, but can have a 12.5% position size versus 8% for Grow. So it is much more aggressive than Grow. Thus, Grow and Turbo have individual stocks and ETFs with those rules, buy and sell rules, and those are currently what is being offered, although Grow may close soon. Robo only has ETFs and is reserved for tiny accounts. Okay. Then I got multiple client emails asking me the timeline about Grotection, which tells me it's going to, I thought it was going to be 3 to 6 months. It may be just a month or two. In any event, so with that backdrop, Don, do you have that other email or no? That one?
Yeah.
Okay.
Yeah, it's about a prospect who said he's decided to come on board, but he wanted to set up a call so he can understand how we would allocate capital into the market when the market is extended to the upside the way it is. And my reply was, we've been getting this question a lot lately. Everybody thinks we're extended and due for a pullback. A recent client was petrified, but she's now up a little over 5% over the past 6 weeks. The answer is very market dependent, but the bottom line is we never plunge new client money into the market. It's done slowly and methodically with a constant eye toward progress while protecting the downside. You should expect 20 to 30% into the index over a 1 to 2 week period, plus new buys and low risk entries to existing positions. Our current fully allocated clients have 5.82% of their current holdings at risk. This is the REBAR, which stands for Revere Estimated Balance at Risk stat that we mention in every video. For new clients, it varies from 2 to 4%, depending on the progress that we're making in the portfolio and when they came in. So that's it. And it's very true that everybody, there's something very strange happening. We talk about it in our videos, tied to sentiment, and a lot of it depends on what news channel you watch. People would think that the sky is falling if you watch certain news. If you watch financial news, they'll tell you the market is just off of all-time highs. But it's also, we've had a great run after the washout back in April. That was the tariff tantrum. And we've bounced very nicely to all-time highs off of that. Our job as a money manager is to protect during that sell-off and take advantage when the sell-off ends and we go back to the upside. And that's what we detail on videos every night, including this balance at risk statistic that we give for fully allocated clients. Obviously, it's less if you're not fully allocated and you just came on board. But the bottom line is we don't plunge your money in. This is a marathon, not a sprint. We're looking to establish a long-term relationship with you. And the last thing we want to do is put all the money in and have you lose 4 or 5% over a short period of time. So
by the way, that's an experience they have, Don, because at other places like I said, are you at a brokerage house? If you're at a brokerage house, a custodian at the pie charts or us, a lot of times they don't get paid until they own their stuff. It's about the products. It's not the strategy. So as soon as you come in, they liquidate everything you have and they buy all the stuff they own because they don't get paid yet. At Revere, when you come on, Don looks at your stuff and says, dog, 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 sell, sell, sell. These two look good. Here's where I'm going to put my trailing stop up until we need the cash. He doesn't just sell your stuff just to sell it. Then he looks at the stuff we have. Some stuff's extended. You missed out. You can't have it. That's on. Here's the things that are still within buy range, and then you get whatever the next new buy is. So you're assimilated over the next 2 weeks to 2 months, depending on the market price and what the market signals is telling us. It's not like a set. We don't know. Like people ask, how soon will it take you to get me assimilated? 2 weeks, or is it going to take one? It depends. Because we're going to get assimilated. Here's the one thing though. So every stock in our portfolio has its own unique stop loss based on its own average true range and beta, its own volatility. So a more volatile stock will have a smaller position size, but a wider berth, a lower stop loss, because it has to. Otherwise, just daily trading gets stopped out. Then Don has that rebar, the whole portfolio estimated. He's got metrics and data for all of this. And then we actually have a data scientist that's outside that ensures that what we're looking at is what we think we're looking at. So does your advisor do all this stuff? Does he sound like this? Is he this meticulous, or he's asking you to go to lunch or for a tea time, or she? How meticulous are they? Are you getting a pie chart? Are they farming it out with mutual funds? Ask them a question, her a question. Where's your stop loss? How are you going to protect my portfolio? How much is my total portfolio downside at risk if everything got stopped out in one day? Ask them that question. They will give you a blank stare. They will look at you like you're nuts. What? Why would you ever liquidate in one day? I don't know. We might. I've got that plan. I've got 4 or 5 Armageddon plans. Price is truth, no exception, period. So with that, Don, what is price? The markets are telling us bullish, and everybody's worried about it's being extended. It's too high. Most people don't, even IBDers, don't believe the market can go high. Folks, if you're an IBDer, what is price? What are the markets telling you? So Don, what's it saying?
Well, let's talk about very quickly with the 10th anniversary and the other things that we're doing. You mentioned our data scientist. The fact that we're closing Grotection doesn't mean we're not taking any more money. We'll have a new product that's coming out. We'll also are crunching numbers to see what the optimal ratio is between Grotection and Turbotection. So some of the assets in Grow may migrate into Turbo. Some of them may migrate into the new product that we have coming on. And the first task for the full-time data scientist coming on board in September, we've worked with them in the past, and that has helped to develop a bunch of our volatility data that we rely on for position sizing. And one of the first things he's going to be put to work on is an ETF strategy that will outperform the market. And that'll be part of the new portfolio that we're going to be rolling out for clients that come in after Grotection hits 400 million. I would expect the performance of the new portfolio to be probably not as good, but maybe better, depending on what the ETFs are doing, if they're giving us better return than the individual names are going to be. But it won't have the track record that we have for Grotection right away. So there's always a little bit of angst for people that are wanting to go into something that hasn't been around and doesn't have a track record.
Sure.
So that's one of the new things that we're adding on, and there'll be a lot of overlap between Grotection and the new portfolio, because it's just the smaller names that the new portfolio won't be able to own, and they'll be replaced by this ETF portion of the portfolio.
Right.
So,
and by the way, I want to make one point. So whenever Don takes a position, sorry, I didn't mean to interrupt Don. Whenever Don takes a position, his assumption is that stock is going to make double the S&P during its holding period, because his thought is, if I don't think I'm going to make at least twice as much than the S&P, why not just buy that same position size in SSO, which is 2 times the S&P, right? So now you've got 500. Now you got a little diversification on an uptrend. So now you got not just one single stock risk, but you've got diversification with the same or higher expected return. So if you use ETFs, it's not that you can't make money with ETFs. You absolutely can. You just got to know how to do them and trade them. And that's what we're honing in. In fact, Grotection's 50% of the ETF portion is really what made the portfolio smoother and better and longer term, where you got your results, right, Don?
Yeah, it is. The stock portion of the portfolio outperforms the S&P one-time version, but it doesn't outperform the SSO or UPRO when we leverage into those. So that it's all of the components complement each other and help to smooth the volatility.
Right.
So you want to talk markets, Dan? Let's talk markets. And last Friday, August 1st, things always happen strangely at the end of the month and the beginning of the month. You never know why. There's rebalancing going on. There's window dressing for statements that come out. But July 31st, we had a gap up to a new high on some earnings and a negative reversal. Not bad. I mean, we closed below the 8-day moving average. We're still above the 21-day, the 50-day, the 200-day. Anybody that follows us knows the time frames that we track. But then on Friday, 8/1, we gapped down and closed below the 21-day moving average, and that was the first close below the 21 in 68 days. So our long-term trend indicator was on green for over 68 days as far as the S&P 500 and the NASDAQ 100 are concerned, because a lot of the gains are coming from the big tech names that are overweight in the market cap weighted S&P 500 and the NASDAQ 100. So we trimmed some things. We were fully prepared for things to go lower when the market opened on Monday, but we were also prepared by knowing what not to sell. We have rules that if we're okay, no matter what our emotions say, it wasn't a good day Thursday, wasn't a good day last Friday. Let's look forward to Monday. Well, let's not jump the gun. We don't know what's going to happen Monday, but we know that we're still above the 50-day moving average, the 200-day moving average. We had one close below the 21. We want to get at least two closes below before we overreact. And we haven't closed below the 21 all week. We regained it on Monday. It was tested on Tuesday and held. It was tested on Wednesday and held. Then Thursday, we had a gap higher, and that gap reversed. We put in the high within the first 5 minutes and sold off for most of the day. But again, we held the 8-day moving average and the 21-day moving average. And if you look at this chart here, you can see a gap up after really what had already been 4 days off the bottom. The likelihood that it's going to completely take off to the upside is low. So again, it didn't surprise us that it pulled back. Didn't really expect it to sell off as hard as it did, but really in the grand scheme of things, it was no big deal because we're still above the 21-day moving average and we held the 8-day moving average. So today we come in another gap up. I imagine the expectation is for another sell-off, but that's not what the market's given us. It's holding up very well, and that's what the market likes to do. It wants to confuse people. So if you came in yesterday with the gap up and you bought it, you were underwater immediately and you get defensive. So what do we have the next day? And that's today, Friday morning, another gap up. Well, I'm not going to buy because we may sell off again. Well, we're not. We're holding the gains and we in fact passed the highs of yesterday and then pulled back a little bit, but we're right. We're 3 points away from passing that level right now. So you never know what the market's going to do. So have a plan for everything. I don't know how many people commented on YouTube, our YouTube channel last Thursday and Friday. We're going lower. I'm getting defensive. My reply is keep an open mind, be open to everything until you break the level and you have follow through to that level to the downside. There's no reason to get all uptight and excited about having to put all your money in cash. And this is one of the key components of Grotection. It's not only knowing when to sell, it's when to stay in, when not to panic. And that's why we generate all of these statistics so that we go into every trading day knowing worst case scenario, a dirty bomb going off in Manhattan and the market completely sells off. Our clients are only going to lose 5.82% because all of our stops will trigger. And that's a pretty good feeling going into not only for us as money managers of almost $320 million, but for the clients that go to sleep at night. Some people pay a lot of attention to the portfolio. Some people we talk to once a year and they check in. I don't even know how often they're checking in. We don't want to bother people and browbeat them if they're happy with the way things are going. We're really, contact us if you have a question, if your situation changes. But it's a formula that works. It's a formula that keeps you in when you should be in. It gets you out when you need to be out, and it gets you in and gets you out in increments. There's never an all or nothing decision that has to be made with not only every individual portfolio, but each individual holding within that portfolio. If things get too extended to the upside, we'll take a little bit off. If they start to break to the downside, we'll take a little bit off defensively. If it's to the upside, it's offensive selling. If it's to the downside, it's defensive selling. And then if you break the next level, we'll take another little bit off. And it's just constant minor adjustments within the portfolio, monitoring what the overall indexes are doing as well as the individual positions, monitoring themes, seeing things that are normally seen as a safe place to invest, but are suddenly not. A great example for that is cybersecurity stock. Cybersecurity is one of the number one things that every client or every business out there has to be concerned about. They're being treated like they have the plague right now. Why is that? Well, a lot of other software names are also, because there's a underlying feeling within the industry that the AI apps that are being developed are going to take the place of a lot of what the work that these individual software names are doing. So as a result, we will stay away from software stocks. We'll stay away from cybersecurity stocks. And we'll keep an eye on what's going on with these quantum stocks and AI-related stocks that could be the next big thing. But then, not only are we focused on the individual themes, but we're focused on the big picture as well. And the reason to be focused on the big picture is when you have days where all of growth stocks are getting sold off, very similar to what happened on August 1st. The money didn't leave the market. It went into value sectors, and we catch that rotation by owning the S&P 500 and smoothing the overall return for that day, where if we were just in 10 high growth names, we might be down 4 or 5% instead of being down 1.2%. So it's all designed for smooth uptrends with downside protection if the market turns on us. And it's not our opinion of the market turning on us. It's the facts of what's going on with the actual price, because more people are pessimistic about the market, the economy. They just shouldn't be, based on what's going on with the numbers that are coming in and being reported. There's some weakness, but there's also underlying strength that's been boosting the market higher. There's themes where money is rolling into when other themes become out of favor, and rotation like that is a healthy part of a bull market. And we're just riding the wave and taking advantage of it. There was a shot across the bow last Friday, Thursday and Friday, with the gap down from or the sell-off from the high on Thursday and the gap down on Friday, and a close under the 21-day moving average. That lasted one day. That's it. So everybody was prepared for Armageddon after that. And over the weekend, it was incredible, all of the negative sentiment on Twitter. We're gapping down Monday. I have all my powder dry. It just didn't happen. We regained the 21-day moving average, and we're at near the highs of the week right now. So follow what price is telling you. Price is truth, no exceptions. Everything that we do in-house is backed by statistics, and we remove our opinions from virtually everything that we can do, except from doing research and gathering an opinion on a developing theme. But then the price has to back that up. And also, no matter how much we like something, if it's not working, we're not going to be in it.
So basically, what you're saying is it's really hard work, and we do the work here. But here's why what we do does work, folks. If you look at that chart up on Don's screen, look at those trends. The trends last for a while. What he's doing is he's measuring with data, with metrics. He's measuring probabilistically the strength and the momentum of the trend. Really, what we're doing is we're measuring the buying and selling in the market. We're measuring what investors are actually doing with the fundamental feedback. Look, I'm classically trained, CFA, I got accounting background, all that stuff. I've been formally trained in fundamental and valuation analysis. I got CFAs call me all the time. Can I put my resume in? I go get your CMT and call me back. Chartered market technician, because it works better. It keeps you out of harm's way. You don't have to get crushed every 5 years. Anyway, sorry, Don, didn't mean to steal your thunder.
Well, I mean, there's been 20% pullbacks in the last 3 years, Dan. 2022 was a bear market. This harsh correction with the tariff tantrum right here was a bear market. but we recovered from it, and we've
Yeah,
got
so
rules
the
to get
S&P
him.
right there where he's showing you, the S&P was down 20% intraday, over 20% intraday. So technically it wasn't a bear market because it closed down about 18.9 or something, Don, something like that. But
Yeah, there were 3 days where we pierced 20% intraday, but none of them closed 20%.
and why is that? Because listen, folks, the sell side on Wall Street, the market makers, they will try to defend both correction territory at that 10% level and 20% bear market territory. So the first couple times when it first breaches, they'll do buying and they'll try to defend it for a day or two. If it keeps hitting that level, it'll finally breach and break through. Point being, though, if you're an active trader and you're watching, that was a bear market. If you were down 20%, it's a bear market. I don't care what you label it, right? But even down 18.9 or whatever, closing down 18.5, 19, we were down 8.5. We were down a third as much. We didn't breach double digit. In the COVID bear market and the inflation bear market, we breached double digit just barely. Markets were down 28.5% and 35% respectively. How did you do? Think about that pain. How did you do? Were you able to go, it's a little bit uncomfortable, or is it like, oh my God, do I need to go back to work and be a Walmart greeter? I don't know. What's your truth? Here's the other thing. Don and I, we have all of our money in these strategies, besides real estate and gold, whatever, hard assets. But we got all the skin in the game. We're not that guy in CNBC saying this is the greatest thing since sliced bread. I don't own it. My wife doesn't own it. My company doesn't own it, but you should. That's because the client is the company, what he's touting. He can't own it. It's a conflict of, it's a violation if he owns it and then touts it to you and sells it to you. That's on the blacklist. He can't talk about it. When we say we own a stock or this stock's the greatest thing since sliced bread, if our client owns it, we own it at the exact same price and timestamp. Your performance, once you're fully assimilated, would be exactly like ours, our family, the people that work at Revere. Anyway, sorry, Don, go ahead. I'll stop, I promise.
No, you're good. I'm really excited for Luke is the data scientist name who's coming on board starting September 1st. We've got a laundry list of back testing projects and some applications for AI that we're going to do with we have a massive amount of data and portfolio data and client data and client trade data. That's our clients are really going to benefit from this. And like with everything, any decision that we make is going to be backed by data, not by opinions.
Right.
So that's where we are on the market. In fact, I just got an alert, Dan, high of the day, and that's high of the week also.
Giddy up.
Riding the wave.
Yep.
All right. So the guys this week, Todd's going to talk about some long bases and in some pretty impressive looking names. And then Ted is going to do a great presentation on applying Perplexity AI and some of the things that it can do to help you. And it also, our research time has just been cut down by, I can't even tell you by what percent by using
hours in the morning. Hours in the morning. Yeah,
including Perplexity. It's really amazing.
Yep.
And these are the stocks that are driving the market higher, and you'd be a fool to not focus on them. And that's another flaw of the pie chart.
What was
you're not.
Yeah, what was that stat that only 10, the top 10 stocks in the S&P 500 versus the 490, the rest of them? Remember, that came on the group chat a couple days ago. You guys were sending it back and forth. And it's amazing.
The gains are what's focusing on the gains, the names that are driving the index higher. So we take advantage of the individual names by overweighting them, but then we also take advantage of the benefits of the index when money rotates out of those on those days and goes into the value half of the S&P 500. So net, it's designed to smooth the equity curve and limit drawdowns. So let's go to Todd first. Take it away, Todd.
Okay. I'm going to talk about 3 stocks today that peaked right around 2020, 2021 during the COVID peak in a lot of these growth stocks, had multi-year declines and are now close to those all-time highs from back in 2020, 21. And the first one we're going to bring up is SOFI. And SOFI is a fintech bank, basically, that services and disrupts traditional banking, everything from loans, student loan refinancing. They have investment products as well as insurance. And they just recently reported earnings here, and they had a substantial beat and guide higher. Across the board, everything was excellent. Their membership growth was up 35%. They doubled their fee business, so it was quite an impressive report. But it reversed on that day, and then that night they announced the infamous secondary offering of $1.5 billion, and the stock gapped down to its 20-day moving average, held, and it's been impressively bouncing off of that 21-day moving average and holding ever since. But what I wanted to focus on is the weekly chart, which we've noticed a lot of these types of situations, including Robinhood, where they peaked back in 2021, had a rapid sell-off, and have come up the right side. And it's almost like a magnet. And this one backed off almost right at those all-time highs. But my point here is you want to watch these, because this now can reset up and eventually take a shot at those all-time highs, especially with the growth coming into the stock. And the next one I want to talk about is Lumentum, LITE. This is another one that peaked late in 2021. And at that time, 40% of their business was concentrated in Apple. Apple was using their V-Cells laser products for their facial recognition, and then Apple decided to shift to a camera-based facial recognition system. So LITE basically reinvented itself, made a bunch of acquisitions, and now they're benefiting from surging demand in data centers and optical products, where right now they supply optical and photonic laser products in V-Cells. V-Cells are also used in robotics, and they detect like space, and it's going to be a product that's heavily used in AI. And you can see this has had just a massive rally back since its most recent earnings reports, and relative strength is pushing new highs. You can't see it because my face is in the way, but this has gone from several quarters of negative earnings to now several upcoming quarters of triple-digit earnings and sales. So this just recently pushed through those 2022, 21, 22 highs and has earnings next week. So we'll see if the momentum will continue in this name. It's also benefiting from some earnings reports today from OUST. How do we pronounce that, Don?
It's either oust or oust. Depends who you're talking to on the team.
Yeah. So we had a survey on that, and the opinions vary. And LASR is another one that reported today that's doing very well. So it's getting a little pin action from those names, which are very small names. And finally, the last one is Shopify, which is also approaching those post-COVID 2021-22 highs, and had a really nice earnings report here this week. And note, a few weeks ago, this was also on the IBD top new fund buys, where new funds purchased about $2 billion worth of stock during the month of June. So again, these are names, with good, strong earnings growth, strong sales, good comeback from the COVID highs that should be on your watch list.
Good stuff, Todd. It's amazing how you see them pause when you get up to that those old high levels, and that's part of behavioral finance, and it's also something that O'Neill used to talk about all the time. If I just get back to even, I'm gonna sell, and that's why you see resistance like that. All right, thanks.
Philosophically, there should be no reason. I mean, you should have no prejudice. I mean, if you're in a perfect state, you shouldn't have resistance there. It shouldn't, but just subconsciously, you look over at that old high, and that kind of stops you. And what Don's saying is, people that had owned it there, that are trying to get back even, they finally get there and go, oh God, I'm back even, and they sell right there. And so you'll get a wave of selling right at that old high. And that's a pattern, and you can see that over and over in the charts. Go ahead, Don.
All right, let's turn it over to Ted. He's going to take the controls and show some perplexity magic.
Thank you, Don. So not only do I want to show off Perplexity, but I'm actually using the Perplexity made Comet browser, and it's a agentic artificial intelligence browser. Pretty much it's exactly the same as Google Chrome. It's actually built on Chromium. So I was able to really just simply download all of my bookmarks from Chrome. So it's been a super easy transition. After an hour of using it, a few weeks ago, I transitioned immediately. And sometimes I notice that it uses less computer memory as well. So that's another plus. But this is the Comet browser. For those that only have the free version, you kind of have to get invited to it. But if you want to pay the $200 a month, then you get the Comet browser instantly. But they're rolling out new invites quickly, so I'm sure to get off the wait list won't take too much time. So continuing on, that's just an introduction of Comet. Now I'm in Comet, and pretty much instead of Google, it defaults to Perplexity. You have, so like let's just show, for example, you open a tab, it defaults to Perplexity. You have this whole browser here. Let's say I'm on market search, and I'll definitely show some features in a second. The assistant's right here. You pull that up. It's also Options A on Mac. I'm not sure the equivalent on Windows right now, but it's one of those specialty keys, and that allows you to open and close that as well. So first feature I want to showcase is more logistics, not in stocks, and I'll go over the stock related features later. For example, let's say you're watching this podcast and you heard Don and Dan talk about RVAB and rebar. Sounds like jargon to you. We also have seen us on Twitter and briefly remember that Don has talked about RVAB, rebar, and our process on a YouTube video, but you don't remember exactly which one. So I'm going to prompt it. Find the YouTube videos where Don Vandenbord talks about Revere's process, RVAB, and rebar. And so it's going to scrape the internet, search around. You can see it's already looking at YouTube channels, Twitter. This is the one with Richard Moglen. But let's say you just look at a quick little summary, go down here. You're looking at this and you remember that, let's just say you remember this is the one that you watched before or you saw come across your screen. So you click this YouTube video, and this is one of our podcasts. But the one I was looking for, let's see which one this is. This is another Don Vandenbord video. But pretty much you can find all the videos Don has been in and spoke about or mentioned RVAB or rebar. If you're not satisfied and another one's not showing up, you can prompt it, ask for another deeper search and be more specific. So the one in my head that I've come across is, I remember Don was on a video with Webby, but I'm not exactly sure, or Mike Webster. Webby's his nickname, but I can't remember exactly where to find it. So I'm going to ask it, find the video with Mike Webster and Don talking, discussing Revere's process. And a lot of times with AI, sometimes the first prompt might not give you exactly what you want. A previous prompt, I was just testing it before this, did give me exactly what I wanted, but sometimes it just doesn't. So I see a Mike Webster and Don one here. This is a clip. And then let's see, it pulled up Mike Webster's channel, and then you can go find Don's video. Another one, hang out with Don, this 2-hour, 40-minute clip. So I'm going to pull up YouTube now. And let's say you're in a rush. It's 2 hours, 40 minutes, and I just want a quick summary. So I pull up the assistant, and I just press summarize this video, and let's see what it gives me.
Yeah, that's amazing. Just truly amazing.
Just summarize the video. Guest Don Vandenbord, investment philosophy, heavily influenced by William O'Neill's CAN-SLIM principles. He advocates market timing based on technical signals, actively managing risk, and avoid Wall Street's conflicted stay invested narrative. See how that's pretty cool. You can see portfolio structure, Revere Asset Management, about 50% indexes, SPLG, SSO, UPRO, adjusted to market conditions. 50% 8 to 12 leading growth stocks chosen for sector leadership and liquidity. I mean, it's pretty amazing. No use of margin. Don uses a custom RVAB. So instantly, this video is about RVAB. And now you can dig through it and find exactly the place Don talks about it. Risk management, transparency, accountability, putting out nightly videos, weekly podcasts like this one that we're on right now that you're watching. And just really cool lessons and recommendations for investors, beginners, intermediate traders, professionals, and just a lot more about what we do. Market timing, 21 EMA, 50-day. You get the point. I'm not going to go through this whole search right here.
Oh, look at the music. I'm looking at the music. Led Zeppelin. I like it.
So that's a really cool feature with Perplexity. You can pretty much talk to YouTube videos now, like you couldn't
That's
before.
insane.
Summarize them. You can talk to YouTube videos now. So this is the first kind of feature I wanted to show, how you can find these YouTube videos. This AI agent goes on the internet and finds exactly for you which video you want to see, and then you can
Wow.
pull it up and quickly summarize it. So that's the first use case I've used before. So let's get rid of this as well. Now I'm on market search here. Let's say Don, me, Todd, Connor, anyone on the team is just screening stocks, and you come across this name A-Lab. You see it's made this huge move. It's gapped up, but it's like, who knows what this thing is, what they do, why it went up. So I'm going to come back on assistant here, and this is where it gets really cool. When you press slash, they create this shortcut list. I've created a shortcut called SD desk, so stock description. And pretty much this is the prompt. I'll slowly show it just so those can screenshot it. And maybe we can include this in the podcast description, Dan, after this. So
Okay.
those who have comment and Perplexity can use it. So let's just slowly go through it. I said, what does this ticker/company do? And I didn't even specify it because it knows on the screen. It sees your screen. I said, first, explain what the company does in maximum 2 sentences. Be clear and direct. Of course, we want to first get a quick gist. That's why I have that there. Second, sometimes the company could just be filled with jargon. Who even knows what the company does, even after reading the description? So I said, second, explain it to me like I'm 12 years old. Super simple with relatable examples and analogies. Personally, for me, I customize it this way because I learn through examples and analogies, and that's just how I've always liked to think. So that's really helpful for me. And this is fully customizable, so you can take this prompt and change it however you wish. Next, then give the standard professional business description, industry, product, services, customers, competitors. And this is key because then you'll know what their competitors are. And if it's in a group theme, you can immediately then pull up all the tickers and companies that are publicly traded and build a watch list that way too. Competitive advantage, their moat, any notable metrics or achievements. And then I also had list tickers of competitors if publicly traded, and then keep both descriptions clear and concise. So the thing with AI is it can't just read your mind. Maybe in the future it will when we have Elon's like Neuralink chips in our brains, but right now it can't. So you really have to be explicit in exactly what you want. Like if Don's giving me instructions, I can't read Don's mind. So he's going to tell me exactly what he wants to see from me. And as a human or for an AI, then it can actually execute the task for you. And then another piece afterwards, you get a gist of the company. I said, also, why did this stock make a big move recently? Show all major news and earnings events for the past 3 months in a table. And I give it instructions on what to put in the table. So now let's try this out. Let's see. S. And then it's getting to work right now. Just imagine how long this would take you to get a description, then figure out what the company does in simple terms, products, services it offers, competitors, its moat, and a whole timetable of what the company does. So here's what it's come up with, and it's still loading right now. You can see it quickly does all of this for you. And it's still going. And right now it's done. So pretty much it's created a little excerpt for you. Oh, I scrolled too far back. 2-sentence business description. I'll let this sit here for a second so people can quickly skim and see the output. For example, some people might not even know what data centers are or cloud companies. Even artificial intelligence could be a jargon that a more mainstream person might not know. So then here's explain like I'm 12, and I find these super helpful. Thousands of computers that need to talk to each other super fast. That's what big tech companies use for things like AI and the internet. Astera Labs builds special traffic directors and fast lanes that help all those computers share information quickly, like building highways for computer data so cool stuff like chatbots and streaming can work smoothly. I mean, when I see that, it's so much easier to conceptualize some of these semiconductor companies and tech companies that can be quite complicated and confusing. I'm gonna continue scrolling down. This is more professional business description, industries, product services, customers. You can see Amazon, Google, Microsoft. You see those big customers is always a plus. Competitive advantage. You can see deep partnerships with NVIDIA for AI infrastructure. Um, more here. Notable metrics gives you revenues, net income, estimated revenue for Q3, gives you market caps, and then competitors. Greedo, Avgo, Marvell, LSCC, VRT, and all the tickers, and you can quickly just put that into a watch list. Why did it make a big move recently? We always want to. You don't always need to know why something makes a big move, but it helps with conviction when price confirms with fundamentals and macro. So that's why I have this in a prompt as well. And to me, I like tables, so I asked it to put it into a table. You can ask it just for bullet points if you want. You can see chronological order: August 5th, August 6th, 6th, 7th, 7th. You can just see it covered the earnings report, analyst upgrades, insider selling, consensus raised fiscal year revenue. So this is really nice. And then you get a summary and then a professional summary as well at the end. So that is another use case I have. Again, you press slash and then you can make as many shortcuts as you want. And some of these are Comet Perplexity's default ones, like Teach Me Comet, which you can use, and then it can teach you what your best use cases are. And the cool thing is with Comet, it starts to learn based off the user and what your preferences are, what tabs you've opened before, what you've searched up before in its history. So that Teach Me Comet shortcut will have Perplexity give you some advice on some of the best use cases for you personally as well. So that is really cool as well. Let's say you want a deeper uh, explanation of A Lab's earnings reports. I'm going to show this feature as well. In Perplexity, if you go to Spaces, you can see you can create different areas for different use cases. So I have one called earnings review. And this prompt I kind of took from someone that I saw on Twitter, and I read through it just to make sure I liked it. And here it is. We can probably also include this in the description. It's not too much, but just quickly, you're a hedge fund analyst, you're reviewing earnings, create a report based on the recent earnings when I give you a ticker. Output should have all of this: company ticker, quarter, report date, and then all the metrics, growth and margins, call highlights, ongoing concerns, even notes, potential quotes that uh, management talked about in the earnings call as well. And the reason Perplexity, I think, as of right now, is the best for finance is because they actually have a dedicated finance space too. And really, it's really cool. Market company, earnings, and for example, let's just say something else, Eli Lilly, it gives you like the results and a quick analysis summary of the earnings transcript. And while the earnings call is going on, it has a live transcript that downloads as they talk. And this is because they have a licensing deal with Quarter. And quickly you can find the documents as well: quarterly report, earnings release, slides, everything. What's cool is, let's say you pull up the slides, then again you can talk to the slides with the assistant on the side too. So I don't want to go off on too much of a tangent. There was a thing I wanted to show you. So let's go back to ALAB on market search. I want to do ALAB at, and that's how you bring up the spaces. I'm going to do earnings review. And this immediately will put ALAB into that Perplexity spaces and then execute the prompt. Hold on a minute. Let's go over here. ALAB at earnings review. You can see it's done exactly what I instructed, and it's giving you a quick earnings review on what ALAB did. Call highlights, ongoing concerns, risk and opportunities, and then some special notes as well. So that is one more use case, and that's this earnings review. I have my custom instructions right here. And like I said, we can include that. And then finally, one more I wanted to share because there's just so many use cases that it would take forever. And maybe I can do a separate video for our YouTube channel going deeper into some of these tools as well. But one more I want to talk about. I know CoreWeave has been a recent IPO and they report earnings next week. And I'm curious about what I should expect out of the earnings report. So I'm going to be CoreWeave at earnings, not review, but earnings prep. And I have an earnings prep spaces with a prompt as well, custom instructions. And now it spits this out. Gives me the quick little price chart, which is pretty cool. And here's an earnings preview checklist that it's giving me. This is the estimates that it's looking for, latest company guidance review, the trend, guidance versus Wall Street, performance last quarter, key events and news since last report. You can see we didn't know about this, 9 billion CoreWeave acquisition in July. Expansion, look, $6 billion investment in new data center in Pennsylvania, new financing notes. It's just really cool. Insider trades, analyst ratings, and then it even goes through the last transcript, concerns and themes. So, and now it puts it in a summary table. I mean, for a human to do this, I mean, Don, how long would you say this would take you?
That's 4 hours worth of work easily, diving into all that, and the old way with Google, clicking the links, following through, one search leads to another search, and it's just mind-boggling the amount of information that can be brought to your fingertips if you know how to ask for it. So how would this be different in Perplexity if you weren't using the Comet browser?
So
is there a substantial difference?
What I'm using here is Perplexity, so it wouldn't be different. Comet just has the assistant on the side for you, and it can also have this voice assistant here too. Just something cool. It's like, hi Perplexity, can you open my Gmail tab? All right. The voice sometimes glitches off, so still needs a little bit of work. But and then there's like a summary button too. There's nothing really much going on in market search, but those are kind of just the extra features done in Comet. It's just more accessible. You can do the options A and quickly pull that up right next to, instead of having to open a browser every time you want to prompt something. But what you like, if you just have Perplexity alone, not the browser, this is what you would see. This is what you would see, and that's probably that probably looks familiar to you in your Perplexity browser. So
yeah, that's what I use all the time. But those setting up those pre-canned, the way to tell it to give you the info is so much more beneficial than just starting from scratch.
Exactly.
Awesome,
and that's
Ted.
where you can create like the spaces to have the custom instructions, and then you can just quickly do like at whatever and then the ticker and write a prompt. So that is a high level overview, even though the segment is already on average longer than most of my segments and our segments on the podcast. But I mean, AI is something every day I kind of wake up with this like weird feeling in my stomach that I'm always going to get left behind, but maybe having that feeling means I won't get left behind. And like a lot of the things I showed to me, like sometimes I like wonder myself, like, am I missing things? I always think that. And I'm sometimes like taking a step back, like even these use cases not being here 2 years ago, it's like humans kind of just accept these new innovations as normal now, and I'm always looking for the next thing, like trying to find something groundbreaking, and that's not coming. But I think these use cases add up, and over time you might not even notice it, but your productivity increases a lot, or at least just saves you a lot of time. So this is common in Perplexity, and right now I think it is the best for our asset management business and finance, just because Perplexity kind of is going towards that area, and they have proprietary data with licensing deals with Quarter, Coinbase, and they've downloaded all like the SEC filings as well. So this is a tool we use in-house.
Get 1% better every day and you'll never fall behind. All right. Awesome, Ted. Dan, that's it from the tech side. Take it away.
All right, folks. By the way, Ted, that is why you have a job at Revere and why we hired you directly out of college, because of that drive and that fear of being left behind. Folks, Ted gets up 3 hours before the market's even open, and he would be screening and doing all these things because we have a roundtable phone call with all the people at Revere and including a couple of an outside analyst. So it's about 7 people on the phone call that are all market guys, and we go around the room and everybody gives their ideas. Anyway, all the guys have to give their favorite 3 long stock positions, long or short, and then their favorite sector. But anyway, they're screening for all the stocks out there, looking for new ideas every morning. And what used to take Ted 2.5 hours, now with AI, takes him 5 or 10 minutes. I mean, he's getting the reports for literally dozens and dozens of companies of the best. It already screens out and weeds out the lousy ones. And so now you're just dealing with the best ones, and then it dives deeper. It really is a valuable tool. And if you're not using, whether it's in the investment business or any business, if you're not using AI, you may be the horse and buggy pretty soon. So you better learn. Folks, listen. If you like what you heard, please tell a friend, tell a neighbor. And I got to ask you one more question. I got to ask this question again. Where do you get your pie? Do you have pie for your portfolio, or do you actually have real strategy where price equals truth, no exceptions? Not any outside marketing, not managing the client or grooming the client, not trying to manage their emotions and their feelings, actually managing the portfolio with risk management. Who knew? Revere did. Just go up to Revere Asset up in the right-hand corner. You can hit the subscribe button. Sign up for our daily market insight video. We do a daily market video every night the market's open. And then we do this podcast every Friday morning. And if you go to YouTube and just type in Revere Asset and hit subscribe, Zach, our producer, will have this thing out by 12:30 or 1 Central Time. That's what our stock nerds can do. They get this video before the market closes on Friday in case they need to make any adjustments. Folks, our money is invested just like your money at the same price and timestamp. And if you're old school, you can always call us old school at 855 Real Wealth. We'll talk to you next week on your money, not Wall Street's money, your money.
Because it's not about how much you make in the markets, it's about how much you can keep.